What this video really reveals is not just what Bitget wants to sell. It reveals what a certain kind of financial audience now finds intolerable. Waiting, switching tabs, moving money, accepting that different asset classes live under different rules. The fantasy here is not just profit, it's frictionlessness. One account for crypto, stocks, forex, commodities, maybe eventually everything. And Coin Bureau's pitch is basically, why should markets remain separate if your dashboard doesn't have to be? That's a powerful question. It's also a dangerous one, because the video keeps treating interface unification as if it were the same thing as financial unification. The central claim is that Bitget's so-called universal exchange points toward the future of trading. One place where you can buy early on-chain tokens, trade perpetuals, access tokenized exposure to stocks and commodities, maybe even let an assistant help execute the whole thing. My problem is that the video proves the convenience thesis far better than it proves the future of finance thesis. Those are not the same claim. A smoother front end does not settle the hard questions underneath. Who actually holds the underlying exposure? What jurisdiction governs it? What breaks in a stress event? And how much of this everything account depends on synthetic representations rather than direct ownership? To be fair, the video's strongest section is the diagnosis of the trading problem. The case against fragmentation is real. If you want to hold spot crypto, speculate on a memecoin launch, hedge with gold, and watch macro data without wiring money across 3 platforms and 2 banking systems, the current setup is absurd. The video gets that. It also understands the emotional pitch of modern trading platforms. Traders don't just want access, they want continuity. They want one balance, one identity, one risk dashboard, one place to act before the market mood changes. That part of the argument is not stupid marketing fluff. It's a clear description of why integrated products are attractive. But then the video slides from fragmentation is annoying to Bitget is solving the right problem in the right way. Take the section about buying new tokens before most traders see them. That sounds like democratized access. In practice, it can also mean packaging the most volatile, least price-discovered corner of crypto as a convenience feature. The video frames early on-chain access as an edge. It spends far less time on the uglier side of that edge: slippage, liquidity traps, governance risk, fake momentum, and the fact that being early in crypto often just means being closer to the blast radius when something goes wrong. The evidence does less work than the narration suggests because access is treated as inherently empowering rather than as a new way to industrialize risk. Then we hit the most culturally revealing move in the whole video: the promise that the platform can research and place trades for you. This is where the product stops being a broker and starts flirting with a fantasy of outsourced conviction. And that matters, because trading is one of the last domains where people still pretend they are paying for judgment when they're often paying to avoid having any. The video presents this as efficiency, faster research, faster execution, fewer barriers. But there's a hidden assumption inside that pitch, that the main problem in trading is operational lag rather than bad models, bad incentives, and the human tendency to mistake speed for understanding. The title promise, crypto, stocks, and forex in one account, really cashes out in the TradFi segment. This is where the video wants to sound visionary. You can hear it in the language. Crypto meets Wall Street, one dashboard, trade global assets around the clock. But the moment a crypto platform starts offering stock-like exposure, the question is no longer whether the interface is elegant. The question is what exactly you own. A share? A derivative? A tokenized claim on something custodied somewhere else? The video gestures at tokenized stocks as if the category itself were the breakthrough. It never quite slows down to explain the legal plumbing with the seriousness it deserves. That omission matters because in financial products, the wrapper is often the least important part. The claim on the asset is the story. And then there's the 500x leverage section, which is probably the clearest example of the video trying to have it both ways. It wants the thrill of mentioning extreme leverage because that signals sophistication, seriousness, big league access. But it also wants the moral cleanliness of sounding responsible about it. The result is a kind of risk laundering. Yes, the video acknowledges leverage is dangerous. But the entire architecture of the piece still treats expanded leverage menus as evidence of product maturity. That's a strange lesson. A platform is not more future-facing because it gives retail traders more efficient ways to vaporize themselves across multiple asset classes from a single screen. The weak point of the whole video arrives around tokenized equities. Nvidia, Tesla, Apple, 24/7, borderless, seamless. On paper, that is the kind of sentence that makes legacy finance sound prehistoric. But this is exactly where a critic has to get annoying. Tokenized stocks are not automatically a liberation story. They are also a story about counterparty trust, settlement design, market hours being cosmetically bypassed rather than fundamentally abolished, and regulatory arbitrage dressed up as innovation. The video doesn't need to be anti-tokenization. It just needs to do the harder work of distinguishing between useful synthetic access and actual transformation of market structure. Instead, it keeps the category a little hazy, because the haze is doing persuasive work. Now, I don't want to flatten this into a hit piece, because the video does have one admirable instinct. It repeatedly returns to portfolio protection and cross-market flexibility instead of just shouting about moonshots. In a crypto-adjacent sponsor video, that is a meaningful improvement over the usual carnival barking. The sections about using multiple asset types to manage exposure are directionally useful. The problem is that the safety language often functions as atmosphere rather than analysis. Diversifying your dashboard is not the same as reducing systemic risk. If the same platform, custody chain, or tokenization model sits underneath all those products, your hedge may be more correlated than the interface implies. Even the presentation choices tell on the argument. The talking head setup is calm, almost educational, but the inserted product shots and floating terms, stocks, ETFs, forex, gold, real estate, commodities, do a lot of ideological heavy lifting. They compress radically different asset classes into one visual pile, as if proximity on screen were itself a thesis. That matters because the video's rhetoric is all about collapse of boundaries. Crypto and TradFi, investing and trading, research and execution, custody and access. It's a beautiful simplification. It's also exactly where you should get suspicious. Boundaries in finance are often annoying for a reason. So my verdict is this. The video is partly persuasive, partly evasive. It convincingly explains why traders would want a unified interface and why the old separation between crypto and traditional assets feels increasingly artificial at the user level. It does not convincingly prove that Bitget's model resolves the underlying financial, legal, and risk questions that come with collapsing those worlds into one account. The strongest part of the argument is also its biggest vulnerability. Yes, convenience is real. Yes, integrated access is attractive, but the more the video says everything in one place, the more a serious viewer should ask what new single point of failure is being smuggled in under that convenience. And maybe that's the broader pattern worth tracking on this channel. Finance content is increasingly teaching people to confuse integration with progress, access with ownership, and reduced friction with reduced danger. Sometimes those things line up. Sometimes they absolutely do not. If you want, stay for the next review, because I want to look at another video in this genre where democratization turns out to mean something much stranger once you inspect the plumbing instead of the promise.